what we're noticing going on is that there's a rotation happening in the market. So obviously growth stocks have been selling off for the last, would they make a high out in February, I think, and they've basically been selling off since like early March or late February, I think. Not all of them, basically all growth stocks except Facebook, Google, Microsoft, and we talked about last week why we thought that was. They're just making a lot of money on ad revenue.
Right.
Facebook said that their ad revenue growth through 30% in Q2. And someone who's works in advertising, like people are just spending more and more, and that's where a lot of this growth is coming for these advertising platform companies like Google, Amazon, Facebook, and Microsoft. Like there's a reason these companies are the biggest tech companies in the world because they've learned how to leverage data and let people use that data to make money for their business, and they make a lot of money off that. But that's a different topic. So so growth stocks have been kind of just selling off altogether. Also, my camera's off on the thing again for some
Yeah,
reason.
I'm working on that. Sorry.
Okay, no problem. We're having a lot of
Figure out why
technical
it's not.
difficulties this
Oh
week
my
for some
god.
reason. Let me turn it off and turn it back on. Um, but yeah, so there's basically uh, there's a market rotation, and so obviously it sucks when you're holding a bunch of growth stocks because that means you're losing money, but it's positive for the overall markets,
Mm,
um, because you want things to slow down when a stock moves. Like let me just put a popular one for people like PLTR. Um, they went up from like $10 to like $50, and now they've moved back down to $19. Like it sucks if you bought at $40, but that's really healthy for the overall market. And so you're just seeing this rotation out of tech and out of growth stocks holistically right now. And that's why you have things that are moving late in the market, like financials, uh, materials, um, dividend stocks, things like that are moving in the market now. And it's because they haven't been moving during basically a lot of COVID because we were in the there's a tech another tech boom happening because everyone's home, and you're seeing this crazy growth for all these tech companies, and all these SPACs were going public and people were excited about them, and it was easy to get in on a company that you felt like was undervalued and an amazing technology for the future. Um, but now what you're seeing is just a rotation. And so let me bring up, we have a couple stocks that we're looking at for dividend plays. One is we
okay.
talked about for the last 2 weeks was Nokia. So we talked about last week that this is potentially a dividend play or it's a dividend stock it's a growth stock, disguised as a dividend play. And so Nokia's been putting a lot of investment into their 5G and working with other companies to get their 5G up and running, or accelerating people's networks, things like that. Uh, so that's a stock that we've been calling out for the last couple of weeks, and I think they're up 10 or 15% since we first talked about them, and I think they're at like a 2 or 3% dividend.
Mm-hmm.
So that's one that we like. Um, circa 2000. Um, so yeah, so that's one we like quite a bit. Um, it should have a little bit pullback here going into next week, just because it's ran quite a bit, but it's definitely something to hold potentially over the next year as some of these growth stocks pull back quite a bit. A couple other ones. AT&T is another one that I like. This is something that I was eyeing back at like 26 or $25, and so this one really hasn't moved at all during basically since the pullback happened in the markets back when COVID first happened. So that's another stock that we like quite a bit. That's another dividend stock that, with the launch of HBO Max or Plus or whatever they call it, getting a lot of subscribers on there. Uh, they're
Okay.
digitalizing their business, and
You're talking
so
AT&T.
that
Sorry.
yeah, so that's
Yeah.
bringing down they're basically increasing their margins because they're making everything digital. So I think that's another good long-term play. They moved quite a bit. I think they're up at like 31, $32.
Yep. Got them at
They're a
216
little overbought technically right now. So
Right.
maybe another small pullback. Oh, 6% dividend, even better.
Yeah.
But like
I'm gonna
expand that chart
close.
more.
Yeah, I'm gonna reset Discord really quick, and then I'll
Okay.
open it up.
Thank you all for tuning in though.
One sec.
We appreciate it. Five people, six people. Let's go.
Sorry, it's Friday night. Technical
Uh,
difficulties for whatever
yeah,
reason.
so AT&T. Is
There
my
we
voice
go.
on the chat?
Got you back. All right. Hopefully that's the last time we have to deal with that.
Miracle worker. But yeah, AT&T is another one that I like quite a bit.
Jeez.
Um,
Yeah, ADT is a really good stock. I actually have a couple calls on them, long
if you
call
go,
options.
if you
Yeah.
expand the chart up there, Nate, to like the last year,
Yep.
from 1 month to maybe 1 year, or
Yep.
maybe even 5 year. Go 5 year.
Okay. They're down 17%, but over a 5 year span,
Yep.
it's all
So
relative.
basically, look at that pre-COVID, where they're at $40 pre-COVID.
Mm-hmm.
So I mean, if they can start keep growing their digital video business, like why would you not buy this at a 6% dividend? Saying that if it just gets back to pre-COVID levels, which is $40, what's that math? I can't remember what that math is, but that's, I think, another great pickup for a dividend play and something that hasn't moved quite as much as it probably can.
Yeah. I know Netflix is getting worried. Their market share is getting a bit
Yep.
torn apart. But
And that puts me to my next stock, Viacom. So Viacom
come up.
was in a big mess about a month ago because of some weird train that happened on, and I can't remember what it went to. It went from like 50 or $80 down to $30,
Mm-hmm.
which is absolutely berserk. That's insane. And people had a lot, or $40, and people lost a lot of money. But when you actually look at their business, they launched they didn't launch, they rebranded Paramount Plus,
Mm-hmm.
and they also have the video streaming service Pluto, I think is what it's called. And
Yep.
so they're kind of going through a similar process as AT&T, but they're not as advanced into the stage yet,
Yeah.
where they're starting to get a lot of subscribers to Paramount Plus because they're launching um, a lot of new content on there.
Right. And then you got
And
Discovery. Yeah.
yep, Discovery, yep, exactly. And so I think they said this quarter they just released their earnings. They beat revenue by like 2 or 3%, but their um, e- earnings per share, like they beat by like 30 or 40%. So basically that
Oh
means that
yeah.
some of their costs are coming down.
Dominated.
Um, yeah, they dominated, and so some of their costs are coming down. And so they said they actually expect costs to come down even more next quarter because they had to spend $2 billion
Yeah.
for
You
like
gotta.
for show production, for putting a lot of advertising into Paramount Plus. There's a lot of new expenses that are not going to exist in a couple quarters.
Right.
So that's another dividend play. I think they're like 2 or 3% dividend.
Yeah.
Um,
2.5 almost.
yeah.
Yeah.
So
And then
I think that's
Discovery.
another good one to look at
Right.
for
They're all
like the
kind of
next
running the
couple
same
years.
chart. Ironically, Discovery, Viacom. There's kind of a pattern there.
There we go.
Those folks. Discovery, their PE ratio is 25.
Yeah, I think Viacom's like 10 or 11,
Mm-hmm.
right? Their
Mm-hmm.
PE ratio.
Yeah, they're 8.71 right now. But yeah, I think to your point, their earnings per share rose to 1.52 buck 52 from a buck 12.
Yep.
So I mean, it's a viable option.
And assuming their costs are going to come down more next quarter because they're transitioning from traditional media like movies to digital streaming, then in theory their costs should come down some more as well. So their earnings per share will jump even more.
Right.
And hopefully their revenue jumps as they get more of these monthly subscribers,
Yeah,
paying
they're
whatever
looking
10
healthy
month 10
too. I
or
mean, look at their
$8 a month.
quarterly their annual revenue, fiscal performance. They're killing it. Up 400 on net profit margin, 400%.
So those are just a couple of the ones that I personally really like, and then I'm